invent Sony? The inventor of Sony is these two great men named Akio Morita and Masaru Ibuka. The predecessor of Sony Group Corporation started as a small company with a capital of just 190,000 yen and approximately only 20 employees needed. Founder Masaru Ibuka said that the purpose of setting up the company was to establish an idol factory that stresses the spirit of freedom and open-mindedness that will, through technology, contribute to Japanese culture. Symbolizing Sony's spirit of challenge to do what has never been done before, the company has continued to release countless Japan's first and world's first products. In 1950, their first product is the first magnetic tape recorder, which is the G-type. In 1958, their name changed from Tokyo Tsushin Kogyo KK to Sony Corporation. In 1970, Sony becomes the first Japanese company to have shares listed on the New York Stock Exchange.
I am Umairah and now I am presenting to you about the management approach, which is the factor to consider in preparing a segment reporting. The first one is the nature of the business activities. An entity may produce reports in which its business activity are presented in a variety of ways. If the chief operating decision maker uses more than one set of segment information, other factors may identify a single set of components as constituting an entity's operating segments. The second one is the existence of manager responsible for the activities. Generally, an operating segment has a segment manager who is directly accountable to and maintains regular contact with the chief operating decision maker to discuss operating activities, financial results, forecasts, or plans for the segment. The term segment manager identifies a function, not necessarily a manager with a specific title. The chief operating decision maker also may be the segment manager for some operating segments. A single manager may be the segment manager for more than one operating segment. The third one is the information presented to the BOD. The characteristic may apply to two or more overlapping sets of companies for which managers are held responsible. That structure is sometimes referred to as a matrix form of organizations. For example, in some entities, some managers are responsible for different product and service lines worldwide, whereas other managers are responsible for specific geographical areas. The chief operating decision maker regularly reviews the operating result of both sets of companies, and financial information is available for both. In that situation, the entity shall determine which set of components constitute the operating segments by reference to the core principle. Sony Corporation is engaged in business through its 6 operating segments, which are games and network service, music, pictures, electronic, imaging and sensing solution, and the last one is financial service. Furthermore, there is the nature of the product or service, the nature of production process, the type of class of customer, and the method used to distribute product or provide the service. As for Sony Corporation, it uses the factor of nature of the product or service in determining the operating segment. These are all the segment comprises of the first one, which is the game and network service. That segment includes network services businesses, the manufacture and sale of home gaming product, and productions and sales of software. Next is the music segment, which includes the recorded music, music publishing, and visual media, and the last one is platform businesses. The third one is the picture segment, includes the motion pictures, television productions, and media networks businesses. Other than that, the electronic product and services segment, it includes the television business, the audio and video business, the still and video camera business, the smartphone business, and internet-related service business. Meanwhile, the imaging and sensing solution segment includes the image sensors business. And the last one is the financial service. That segment primarily represents individual life insurance and non-life insurance businesses in the Japanese market and a bank business in Japan. There are two types of segment in an operating segment, which is the business segment and geographical segment. The dominant source and nature of an entity's risk are written shall govern whether its primary segment reporting format will be business segment or geographical segment. If the entity's risk and rate of return are affected predominantly by the differences in the product and service it produces, its primary format for reporting segment information shall be business segments with secondary information reported geographically. Similarly, if the entity's risk and rate of return are affected predominantly by the fact that it operates in different countries or other geographical areas, its primary format for reporting segment information shall be geographical segments with secondary information reported for groups of related products and services. According to the Sony Corporation Corporate Report 2020, they provide one type of operating segment, which is the business segment.
As you can see, all of these are the board of directors of the Sony Corporation. As for Sony, they have CEO, COO, and BOD. The title of the person identified as the CODM are responsible for making strategic decisions about the entity segment. Kenichiro Yoshida is a Sony leader since April 2018. Mr. Yoshida has been the Chief Executive Officer since April 2018. He is responsible for bringing financial discipline after years of losses from consumer electronics. That function is to allocate resources to and assess the performance of the operation. First and foremost, according to the Sony Corporation report, they provide one type of operating segments, which is the business segment. The transactions occur revenues and expenses that have been regularly reviewed by the CODM and have discrete financial information. CODM likely receives company reports that are broken down into business segments and geographical segments. Secondly, we must evaluate operating segments for aggregation. Sony has combined their multiple operating segments as they have similar nature of the products and services. For example, the games and network services includes network services, business, the manufacture sales of home, gaming products, and production and sales of software. Thirdly, Sony Corporation is a public company and it is required to provide disaggregated information about an operating segment if it meets one of the following quantitative thresholds. According to the Sony Corporation Corporate Report 2020, we are using revenue from book sales to external customers and inter-segment sales. If a segment satisfies any of the 10% tests, it should be classified as a separately reportable operating segment. Next, we must evaluate operating segments for aggregation again by looking at the remaining operating segments, those that did not qualify under any of the 10% tests, to see if any are economically similar. According to the GAAP requirements, the combined revenues earned by sales to external customers in the separately reportable operating segments must be at least 75% of the total consolidated revenues across all operating segments. If this 75% threshold is not met, you must disclose financial information on additional operating segments, even though they do not satisfy all the criteria explained until the 75% bar is met. Lastly, after you identify all separately reportable operating segments, the information all other segments is aggregated into all other category. The only requirement for this all other category is that the sources of the revenue should be described as part of the disclosure. As you can see, these are the information in the financial report. We are using this information to calculate 10% and 75% thresholds. After being calculated, they have 4 segments that exceed 10% and it can be reported separately, which is game network services, electronics products and solutions, financial services, and also imaging and sensing solutions. The combined external revenue of identified operating segments must be more than or equal to 75% of the total external revenue of the entity. The combined external sales from game and network services and financial services constitute only 53.15%. Hence, an additional segment electronics and products and solutions is added on the basis of the highest external revenues generated, and it constitutes only 69.82%. Once again, an additional segment imaging and sensing solution is identified as a reportable segment on the basis of the highest external revenues generated. While the other 3, music, pictures, and all other, will remain as non-reportable segments. To construct a new segmental report, we present you a segmental report of the revenue and net income of security income only, as Sony Corporation does provide these 2 information regarding the segmental report. These 4 independent single segment games and network, financial services, electronics products and solutions, and imaging and sensing solutions indicates that they are reportable segment. while for the other columns indicates that there are non-reportable segments, which is music, pictures, and all others.
In conclusion, Sony Corporation uses segment reporting to document the performance of different areas of the business, which are games and network services, music, pictures, electronic, imaging and sensing solutions, and financial services. However, the company may have advantages and disadvantages of segment reporting. The advantages of segment reporting is transparency. For businesses that operate in different categories like Sony Corporations, segment reporting can reveal which areas are profitable and which are drained on the bottom line. If the segment reporting shows a business its overseas operations are more profitable than domestic operations, it could be prompt a change in strategic direction. Done properly, it keeps managers from hiding unprofitable ventures. Other than that, Sony Corporation segment reporting also allows stakeholders to get a better sense of the fluctuations that might affect overall numbers. If a business reports much higher earnings than expected, for example, segment reporting shows where those earnings are coming from. A stakeholder can look at the same report to determine if the numbers are sustainable. It's designed to help investors better understand the business and its potential cash flow. Then, it is widely recognized by authors in accounting and finance, accountants, and accounting bodies that segment information has great usefulness in investment and credit decisions. It is argued that segment information enables the financial statement users to better analyze the uncertainty surrounding the timing and amount of expected cash flow, and therefore the risks related to an investment or a loan to an enterprise that operates in different industries and markets. The disadvantages of this segment reporting is data manipulation. Segment reporting lends itself to data manipulation if the information is reported in the true management eye style. This gives company leaders more discretion in how it determines how segments are constructed and what metrics are reported. Lastly, emphasize on the present, segment reporting can place too much of a focus on short-term numbers. For example, a business might create a division just for its online work. The division could run a significant deficit before the right people and infrastructure are in place. If these losses are outweighed by the company's overall performance, they might not stand out on the financial statement. However, breaking out those numbers as a data point via segment reporting can lead to pressure to reduce those losses to enhance short-term earnings.
Basis used by the company is discrete method. What is discrete method? Discrete method is different from annual year report. It uses separate period, which is in the Sony Corporation. For the interim report, they use first quarter, which is 3 months from 1st April until June 30. The period is apart from annual year period. In discrete method, interim report also prepared use the periodic basis. In Sony Corporation, they use the first quarter each annual year, each annual basis, or cumulative period for all the state, and all the period will be compared to the same period in the preceding year. The financial statement in the interim report of Sony Corporation use the unaudited condensed financial statement. These presentations are not in accordance with the accounting principle generally accepted in United States of America. However, Sony Corporation believes that the financial statement is useful for investors. Also, financial statement in this interim report use the currency of million yen, Japan, and all value are rounded to the nearest million, except when otherwise indicated, such as per share amount.
Under ASU 2019-02, the capitalized cost of right to program materials shall be reported in the balance sheet at the lower of unamortized cost or fair value on a program-by-program, series, package, or day-part basis as appropriate. Hence, capitalization of film costs associated with episodic television series require the use of fair value rather than net realizable value when determining potential impairment of broadcasting right, and modifies the presentation and disclosure requirement for film and broadcasting right. An entity tests for impairment at the film group level when it has concluded that the film is predominantly monetized with other film and or with license agreement. If a film is expected to be predominantly monetized on its own, that is independently of other film or or other license agreement, an entity tests for impairment at the individual film level. One, in case of a film group for Sony Corporation, impairments are evaluated at the overall film group level rather than the individual title level.
Second accounting policy is income tax. FASB issued ASU 2019 number 12, which improvised ASC 740 to simplify the accounting for income taxes. Sony estimates the annual effective tax rate (ETR) derived from a projected annual net income before tax and calculate the interim period income tax provision based on the year-to-date income tax provision computed by applying the ETR to the year-to-date net income before taxes at the end of each interim period. The income tax provision based on the ETR reflects anticipated income tax credits and net operating loss carryforwards. However, it excludes the income tax provision related to significant, unusual, or infrequent items. Such income tax provision is separately reported from the provision based on the ETR in the interim report in which it occurs.
Next, the question required us to show type of interim report that used in this statement. The type of interim report used in this statement is: first, consolidated balance sheet, consolidated statement of income. Third, consolidated of comprehensive income. Fourth, consolidated of cash flow. And fifth, notes to consolidated financial statement. If an entity present item of profit or loss in a separate statement from annual report, the company will present interim condensed information from that statement. Sony has published a complete set of financial statements in its interim financial report, and the form and content of those statements are consistent to the requirement of accounting for a complete set of financial statements.
Period for current and comparative of each statement are as provided. There are two adjustments that we made for Sony, which the first one is additional revenue. During the pandemic, picture segment is the most impacted segment even when many movie theaters are reopening around the world. Therefore, Sony Corporation decided to develop a new project which is drive-in movie. These drive-in movie theaters where cinema structures consist of a large outdoor movie screen, a projection booth, a concession stand, and a large parking areas for automobiles. Within these enclosed areas, customers can view movies from privacy and at the comfort of their cars. This project can ensure social distancing is taken care and less risky during COVID-19. Hence, revenue for the picture segment will be increased. On 1st April 2020, the development phase has started. This project is ensured to be accepted by the market. However, Sony Corporation does not have enough capital to complete the project. On 1st June 2020, Sony Corporation was able to obtain additional funding to proceed with the development project. The expenditure incurred to finance the project was 100 million yen, which 80 million was incurred before 1st June 2020 and the balance was incurred within the month of June 2020.
According to FASB Statement of Financial Accounting Standard Number 2, development costs will be capitalized in Statement of Financial Position only if other criteria for capitalization are met. Even though development costs start on 1st April 2020, the expenditure before 1st June 2020 with 80 million of yen cannot be capitalized as one of the criteria for capitalization because the criteria is not met, which is the criteria is no financial feasibility to complete the development phase. The technical feasibility criterion was only established on 1st June 2020 when additional funding has been obtained to proceed with the development of the project. Additional cost of 20 million of yen incurred will be capitalized in Statement of Financial Position, while the cost of 80 million yen will be expensed off in the Statement Profit or Loss. On 1 June 2020, Sony Corporation secured an 8% long-term loan of 20 million yen to finance the development of drive-in cinema. Development will be complete on 31st December 2020. Sony made a temporary investment which provides an interest income of 50 million yen and will be received on 1 June 2020. So, Dina will answer this question.
According to FASB Statement of Financial Accounting Standards number 34, borrowing cost is capitalized on 1st June 2020 as it met all criteria for capitalization, which are probable that future economic benefit will flow to the entity and cost can be measured likely. How to calculate? Okay, first we calculate interest loan, which is 20,000 times 8% and times 1/12 months, resulting in 133 million. Then minus the investment income of 50 million and we will get the total of capitalized borrowing cost, which is 83 million. As for the effect on statement of financial position, there is no development cost before adjustment. After adjustment, we will have development cost of 20,083 million from the sum of initial development cost of 20,000 million and borrowing cost of 83 million. That is all from our presentation. Thank you.